Paul, thank you so much for joining us on this end for a change.
Thank you for having me.
First off, can you just give us an update? You say you're in the final stages of finalising this regulation. When is the regulation going to be finalised, and when are these products going to be able to be invested in on the exchange?
Now, the process we follow in Kenya is once we complete the development of the regulations as an authority, we forward them to our Minister of Finance for consideration, for gazettement, and then they turn into law. So what we're looking at is we've been going through over the past about 7 months a process of in-depth market consultations, engaging with all the different key players in the construction, housing, and policy sector for development of construction in the country to really develop a new approach to financing of real estate products. And we're looking to finalize that framework for submission to the minister within the next 2 weeks.
So for the layman out there, just explain to us how these products work and how it's different to actually putting hardcore money, of course, into property in Kenya. And why do you think it's a good way to plug the gap when it comes to finances needed in the housing sector?
Now, a critical challenge in Kenya is housing prices have consistently been going up over the last number of years. So the minimum investment for reasonable housing keeps going higher and higher and higher.
What does that stand at right now? Are there any indications?
You're looking at 10 million shillings, about that's what, a million rand plus for a middle income house. And that puts it further and further away from people's access. But we're still seeing a really booming real estate sector, and we wanted to give the retail investor sector an opportunity to get an exposure to that benefit. So this product is looking at a collective investment product, a unit trust or a mutual fund type structure, so that you're able to buy a unit in a large scale construction, so you're able to enjoy the benefit of that growth.
Okay, so there are two forms. There's one development REITs and then investment REITs. So just explain to us the difference between the two.
Now, investment REITs are what are known as REITs around the world. That is, you have a product where you have income generating, usually commercial properties, that generate something in the form of a fixed income security. Every month, 3 months, you get a fixed amount. But what we're given Kenya's situation where there is still a significant lack of substantial housing as well as commercial properties, we've developed what's called a development REIT, which is now a collection investment product for purposes of construction and development to really try and stimulate that sector. Yeah.
And in terms of the pricing difference, the one has 100 million initial asset base, and the other one is 300 million initial asset.
Yeah, initially those are the numbers we've put out based on the consultations we've had with the industry, but very likely the first projects that will come up will be significantly larger than those minimum numbers, just to deal with the scale issue. But once the market becomes more familiar with these products, we're hoping to see much more smaller projects coming in to use this product.
Because that leads on to the next question, how accessible this will be to retail investors. I mean, who are you targeting predominantly with this product?
When I think, just for clarification, the 100 million and 300 million is the total asset value of the REIT, not the minimum investment amount. So for the investment REITs, those will not have any, it will be commercially determined what the minimum amount will be, just to make it more accessible. But development REITs, given the much higher risk involved in construction, we're targeting only institutional investors for that product, and it'll have a much higher private offer type threshold for access to that product.
So just to clarify for us, when are these REITs likely to be available on the market?
We're hoping to see them coming into the market by the beginning of 2013, if all goes well with the process of passage into law.
Let's talk about other developments at the Capital Markets Authority. One of them being stamping out money laundering. That's a focus at this point in time. How big of an issue is this when it comes to the markets?
I think the stamping out, I wouldn't say it's stamping out money laundering. It is more of the efforts of the country as a whole to come into line with international standards on anti-money laundering and combating financial terrorism. So in line with that, the authority has put out new guidelines for its intermediaries, dealing with what are the processes they should be following for know your customer and reporting suspicious transactions under the national laws on proceeds of crime and anti-money laundering.
And you're here obviously in South Africa, business or leisure?
Definitely business. We've had an excellent conference that was convened by the Johannesburg Stock Exchange, bringing together participants from across the continent, really looking at capacity development in the capital markets across the continent. So we've had representation from quite a few countries, and it's been very useful.
Do you think that this process, because the JSE often hosts this and has chosen to take a leading role, do you think that this kind of collaboration and the partnerships that it is hoping to form across exchanges is starting to bear fruit?
Definitely, I think it all comes down to creating a conversation platform. It's really, we're all looking to benchmark and harmonize in a common direction. The route we'll take may vary, but I think when you talk of a critical mass for attracting large-scale capital, integration is a key consideration. And you've seen consolidation going on. It's progressing well in East Africa. West Africa has been consolidated, at least in the WAMU region, for quite a while. And I think South Africa continues to engage the Southern African nations on how best to work towards an integration model. And
of course, you're acting CEO at this point in time. A new CEO going to be appointed anytime soon?
That we don't know. We're waiting for guidance from our policymakers.
Thank you so much for joining us. Enjoy the rest of your stay here in South Africa. Paul Muthaura, acting CEO at the Capital Markets Authority.